This conference will now be recorded.
Hello, good morning. I'm just doing a small video for benefit of some HNI clients or people would like to invest for a shorter duration, let's say 1 month or 2 months. And the motive behind is uh, I don't know how many people believe in saying that money attracts money. So the rich will always get richer. So the person who has money will make more money. So maybe earlier I never used to believe, but once I started trading, I definitely believe in this concept. If you have money, you can definitely make money, much more money. So this is what the today's webinar will be about. So you might be seeing three charts here, three screens. This is basically how I work. I have around 18 monitors through which I get various data, and I analyze the data and I give the calls to you. So this is one system where I'm trading only on Nifty 50, and I have another system where I trade only on non-Nifty scripts, and other system where only MCX is there. So all this will have three systems, three monitors, because I have an graphic card which can display three monitors. So likewise, I have around 18 monitors. Maybe one of these days I'll take a video of my trading setup, and maybe you can see how we do this. So here, basically, what I'm trying to tell you on the left side of the screen is the charts what you are seeing. So I'm not giving you the charts because the people who have used the charts earlier, but they were not that comfortable. So they just wanted the buy and the buy price, the sell price, the targets and the stop loss. This is what they wanted. They wanted it in a very simple way. So what we have done is, you can see in the middle, you have an Excel application, Excel. This works on Microsoft Excel 2007. Here we have the name of the script, that is Nifty. Is it a buy or a sell? What is the entry price? What is the LTP? And if the LTP is in green, it means it is in profit. And in case if the LTP goes to red, then it is in loss. And whenever there is a sell call, you'll find the name of the script with the background as red. And whenever there is a buy call, it will go into green. So finally, at the end of the day, what you'll have to check is what is the LTP. LTP is in green, then you are in profits. LTP is in red, then it is in loss. That particular trade is in loss. And the right side, my Nest terminal, and I am even giving you the approximate margins that is required. So you can see Nifty, the carryover margin is 72,000, let's say 73,000 approximately. Bank Nifty, the carryover margin is around 48,000 rupees. Now let's go into the trades. So I'll take you to the chart first. So let me take to the chart of Nifty first. So let's start with Nifty. So this particular chart, what is being displayed for you, it's a daily chart. That means that every candle represents a particular day's trade, the complete trade of that particular day, the high, low, open and close of that particular day. So I have a sell call here. I have a sell call which got generated on 12th of September. You can see at the bottom you have the date, and the right side you have the prices of the panel. So here I have got a sell call on 12th of September, Nifty, and the price was roughly around 11,318. I'm just giving you roughly because I don't want to magnify it and do that. So roughly, I will anyway be posting the entry prices. I'll be posting the entry prices here. I'll just show you the entry prices. So here is the entry prices. You can see here, Nifty sell 11,318. The LTP currently yesterday it closed at around 10,042. So now how do you calculate the profit? You calculate the profit uh, with the LTP and the entry prices, multiply it by, add or subtract, and multiply it by the lot size. That is how you do it. Now in this case, I'll just come back to the chart again. So here, seeing the chart here, so here I have just taken a ruler, and then this is a ruler what I have. So I have just drawn a line from the entry point to the exit point, that is yesterday's, day before yesterday, that is the previous day's close. And from there I have calculated the figure. So here you have Nifty, it's a daily chart. The bars means 29 trading days, 29 trading days. And it doesn't count the first bar because that is where it is generated. So if you count the number of bars, that will be the number of trading days that you have done. So in the last, so it has nearly taken 1 month. That is excluding your holidays. Now including your holidays, it's around 15 days, 45 days. So you just ignore this 45 days, or you can even calculate that way also. It doesn't matter because I am trading only on the trading days. So I calculate it on a basis of the number of bars, that is 29, or let's say roughly 30 in the sense 30 trading days. Now my entry was 11,318. 11,318. And my yesterday's closing price was 10,042. I'm just approximately rounding it off. So I have roughly made around 1,276 points. So the Y value, what you are seeing here, that is your total number of points that you are gained. Let's say 1246 points. 1246 points. See, it might slightly vary because I have approximately drawn the line, the ruler what I have used, I have approximately taken. So you can just go by the Y value. So Y value here is 1,246. So 1,246 points is what we have made in this last 29 trading days. Now in this, there are many days when there was 100 points gap up open, 100 points gap down open. The market was, when you could never predict how the market would go finally. So if you see here, there is a gap down, there is a gap down, there is a gap up, there is a gap down, there is a gap up. So if you see, overall, you are not affected by your trades. So your trade actually gets triggered here on the fourth candle or the fifth candle because you are buying below this sell call what has generated. So Once it gets generated, then you enter the trade. That will be a positional trade, and the margin requirement. And you keep on trailing your stop losses every day. Every day at the end of the day, you just check where it is going, and then there is a strong support here. So once it has broken that support, it was a gap down again, and then again it went up. Market went up by 100 points one day, and then that was a gap up open, and again it fell, and then again the next day it was on gap down open, and subsequently the market has fallen. So Nifty, which started at something at 11,300, that sell call, has ended at 10,042 yesterday. Now I have made 1,246 points. Now what is the lot size of Nifty? The lot size of Nifty is 75. So I multiply 1,246 into 75. I get a price of 93,450. Maybe I'll not be able to do that. So I'm just roughly giving you. It comes to 1,246 into 75 comes to around 93,000 rupees. And what is my investment? What is my investment in Nifty on a basis of 1 second. So my investment is around 73,000 rupees. So I made a profit of 90,000 odd, and my investment is around 72,000 rupees. That's a carryover trade. So my total return on investment, that is ROA for 29 days, is 128%. 128% in the sense you have invested around 73,000 rupees, and you have made around 90,000 odd rupees. So you have doubled your money in a time period of 29 days, 29 trading days, or 45 calendar days, 45 calendar days. So this is how it works. Now let me get to another script. Okay, let's come to Bank Nifty. Let's come to Bank Nifty. I hope you are seeing this Bank Nifty chart. Now, Bank Nifty, I have got a call here. Okay, let me just open the chart itself. So I have a data of 5 years. 5 years historical data is what I have. So that is the reason why we get very good results and very good trades here. So here, Bank Nifty, I am entering at this point, 27,288, and that is my ending Friday's closing price. So I have totally made around 2,762 points. That is again for 30 trading days, or 46 calendar days. Now 2762 into 20 is your lot size for Bank Nifty. So 20 is your lot size. I have made a profit of 55,000 rupees. 55,000 rupees in a matter of 30 trading days. Now what is my investment here? My investment is 47,560. 47,560. So again I have doubled my money. Sorry, 47, let's say 48,000. So I have made 115% profit. So I have again doubled my money here. 115% on my investment. 48,000 is what you have invested. You have made around 50,000, 53,000 rupees odd. Now let me take another trade. Let's say we'll take Adani Ports. So here I have Adani Ports. So you'll be getting your stop loss, and you'll have to keep trailing your stop losses. And in case whenever you want to book a profit, you can book a profit also. So here I have Adani Ports. My sell call is at around 369. 369 is my sell, and the closing price of yesterday was 304.20. So I have roughly made around 63, 64 points. Let's say 63 points. So 63 points into Adani Ports, the lot size is 2,500. So that gives an profit of 1,57,000 rupees on 52 trading days. 52 trading days and 80 calendar days. 80 calendar days. See, in case you don't have to wait till this period. See, the same result what you have got, you could have got much earlier also, 10, 12 days before that of this candle. So the call got generated somewhere around 8th of August, and then yesterday's price was this. So you could have exited at this price also. It was maximum here also. So around 6th of October, you could have exited. So that is also possible. See, it depends on your risk appetite. If you are ready to go on and then keep trading, or else if you keep trailing your stop loss, then also you'll make money. So here you have made 63 points into 2,500 rupees is the lot size. So that gives you a total profit of 1,57,000 rupees approximately. And what is my investment? My investment is in Adani Ports is 1,25,000. 1,25,000. So I'm giving you all this or positional call. So the carryover margin or the normal margin is what the broker will expect you to pay. So that has given you roughly around 126%, 126% returns on Adani Ports. 126% on Adani Ports. Now, likewise, we have some calls. I will come to the chart. So I have come to Z. So I have a sell call here. It bottomed out here. It made around 1,153 points. See, stop loss and targets for every day, you can ask me, I can send you, because this is at the end of the day what you do. 15 minutes before the market close, in case if you just put up an message, I can tell you whether to carry it over or not. Or else if you can keep trailing your stop loss, that is also one method of trading. So 153 rupees on Z. So Z is 153 into 1300. 1300 is your lot size. So that roughly gives around a profit of 1,98,000. 1,98,000 on 100 days. 100 days is your trading days. 147 days is your calendar days. But you have made roughly around 1,98,000. 1,98,000 is your investment. And what is the investment that you need? 92,000 rupees. So 92,000 rupees of investment. So you can roll over, or else you can close the position and again take the position in the next expiry. So for 100 days means it's roughly 3 months. So for 3 months you have been rolling over. Then you get that profit 1,98,000, and your investment is roughly around 92,000 rupees. So that gives you a total return on investment of 216%. 216% on Z. Now I don't know which business will give you this kind of profit. When people struggle to make 10 or 20% every year, and here we are seeing 100 days, that is 100 trading days, you have actually getting a return of 216%. But the catch here is you should be able to invest roughly 92,000 rupees. So you should block that money. Money should not be taken. So that is the reason why I say money will make money and money attracts money. So now I think you would have understood that if you have money, you can definitely make money, especially in the stock market. And now coming back to this blue line, what we have a buy call generated on 16th of October. 16th of October, we got a buy call generated. So the buy, the next top two candles, I have placed the call here. The buy entry is 482. Roughly around 482 is the price, but it has not reached that price. The buy call did not trigger. It did not trigger, and it is coming down. And again, we might get a sell call here. We might get a sell call here. Once we get a sell call, it's a confirmation there is a strong downtrend for Z television. So again, we can enter that trade. I think you got it. So likewise, we have Vedanta. This call, this sell call, at the bottom of the candle, the blue line, what you are seeing, you can see that it has not triggered. This particular call also has not triggered. It might trigger tomorrow or day after. It depends. The dollar index goes up, or the metal prices comes down, or there is some fundamental news. It will definitely come down. Once it breaks this Vedanta sell call at 195, it will further come down. Once it comes down, you can get an stop loss and you can get an target. So as of now, 3, 6, 9, 12, 13. 13 days after the call generated, the call has not triggered it. So your money is not blocked here. So as soon as it triggers, that particular call crosses this blue line, then only you enter the trade. But your figure is already set. That is 195 is your entry. So once you get into 195, you enter the trade and put a stop loss. And I can show you many examples like that. So Wipro is another one call which has not triggered. See, there it is moving near its crucial support levels. maybe in another few days, either Wipro will bounce back or it is going to fall very drastically. And if it breaks this support what we have here, your target could be somewhere around 270, 280, 270 or 280. It can go down to that level. And in case that is for the sell call. Otherwise, if it bounces back, it has already bounced back in this 3 days, uh, it might generate a buy call. Once it generates a buy call, then we go further up. So these are some calls. Now coming to HDFC Bank. So HDFC Bank, it has taken 53 trading days, and your buy value is 145. 145 into I think it is 250. So that's roughly given you 36,000 rupees. 36,000 rupees. You could have exited here, or you could have, I mean, if you would have maintained your stop losses, you would have hit a stop loss also. So that is how it works. And there are some trades like Power Grid. It has given a sell call. It has not triggered it. It gave a sell call and it has gone up. So now we'll have to wait till the call gets triggered. Now for Power Grid, the sell entry is 183. 183 is a sell entry. Now we have Tata Steel. Tata Steel, my entry is roughly around 549, and yesterday's closing price was 552. So it's a minor loss, but your sell call is still continuing. And considering, you should consider even the other calls also. See, as a pack, as a metal pack, you have seen that Vedanta is in red. Vedanta has already given you a sell call. Tata Steel has given you a sell call. JSW has a sell call. We have, I will give you the other non-nifty scripts also. Uh, we have a sell call in JSW Steel. We have an sell in, one second. We have a sell in sale, which is at 70.50 is the entry. And the current price is 63.35. We have a sell in Jindal Steel. The entry is 185. Currently it is at 161. Hindustan Zinc, we have a sell call at 276. Now it is at 271.35. So overall the pack is negative. So this particular Tata Steel call what you have, so though it is under minor losses, you can still carry over the trade because overall the metal pack is down. It is metal pack is down and it's in red. So that is how that is one more strategy how you can trade. So if you ask me, I mean, if you let me just come back to the Excel file. So this is how you can calculate the profits for the trades whatever is generated. The various I will. So now you take Axis Bank. Axis Bank has given me 55 points. Axis Bank 55 points into your lot size is 1200. So you're seeing here, Axis Bank, it has given me 55 rupees, 55 points in a period of 32 trading days. 32 trading days. So 55 into my lot size for Axis is 1200. So it has given me a profit of 66,000 rupees as of now. and it can further go down. It can further go down to around 500 levels, because you have bottom here, you have a bottom here, and it has broken this support whatever it had yesterday, and it has closed below the support line, so it can further go down to 500. So it can go further down to 500. Now, what is my investment in Axis Bank that is required? For Axis Bank, I need an investment of 1 lakh rupees, 1,10,000 rupees. 1,10,000 rupees is my, sorry, it's 1,10,000. No, it's around 11,000 rupees. One lakh, yeah, it's 1,10,000. That's right. So I divided by. So what is your return on investment? My return on investment is around 60% here. And considering Axis Bank is highly traded, I mean, there should be volumes also. So one of the advantages of putting your money in the Nifty 50 pack is that there are good volumes, and you'll be buying one lot usually. Usually you'll be buying one lot. So one lot and selling that one lot over a period of 30 days or 20 days, it's not a big deal. You'll get a very good price for that. So if you see trades of this kind, see Bajaj Auto has given me 148 rupees. 148 rupees into 250. 250 is the lot size. It's given me around 37,000 rupees in a matter of 18 trading days. Now Bajaj Finserv. Bajaj Finserv has given me around 1,500 points, roughly say 1,500 points into 125. 125 is the lot size. I've already made 1,87,000 rupees in Bajaj Finserv. Bajaj Finserv, what is your investment needed? Bajaj Finserv, you need 1,10,000. 1,10,000 if you have, you can trade in one lot. But you have made 1,87,000. So that roughly gives around 1.7, that is 170% returns. 170% returns on an investment in Bajaj Finserv for a duration of 33 days, that is the trading days, 33 trading days, or 51 calendar days. So that is how you calculate. So most of the calls are sell calls, and there are some buy calls also which are generated, but it has not triggered. So we'll have to wait till it gets triggered. Now Bajaj Finance has given me 643 rupees. Now 643 rupees, are you seeing the right chart? So let me just come to the Excel file. You'll be able to see it clearly here. So Nifty sell, almost all are sell calls except Z is a buy which has not triggered, and you don't find any other buy call. You don't find any other buy call. So you can see Cipla, your sell entry was 630. Currently it is 605. Grasim 11,004 was your entry. Now it is at 760. So what you'll have to do is 1,004 minus 760. So that will give you 244 points. And your lot size is 750. So multiplied by 750. So that will give you a profit of 1,83,000 in 32 trading days. And for Grasim, what is my investment? Grasim, my investment is around 96,000 rupees. So divided by 96,000 rupees. So what I am making is roughly around 200%. roughly around 1.190%, roughly around 200% is your current returns on grassing, what you are seeing. So you can calculate for various scripts like this. You minus the LTP and your entry prices multiplied by lot size, and you will get your profit, and then you see what is your margin required, and then calculate the return on investment. So if you just see all the scripts are in profits, and Tata Steel was under minor loss. Since the data is not, we don't have the market now. In case if I refresh tomorrow, it will show me in red, minus. This will go into red. So that is how we trade, and that is what I was trying to prove to you, that money will attract money, and definitely in case if you have money for investment, this is one of the best strategies that you can use in trade in Nifty 50 or non-Nifty 50 scripts also. Non-Nifty 50 scripts also, the advantage is there are days when some scripts go 20%, it will give you 20% returns on even a single day also. There will be lot of opportunities. To give you an example, I will post this chart also for the non-Nifty 50 scripts. Ujjivan, the sell price was 350. I'll show you the. So that's our daily chart. So Ujjivan, you can just see. Just a second. So there was a huge fall from day before yesterday. It fell in double digits. I don't have the data here. So the entry price for Ujjivan was around 350. So you can see it here. It's roughly around 350 was the entry. Yesterday it closed at around 180. Now that is around 170 points. 170 points in Ujjivan in a matter of 49 trading days. 49 trading days, and roughly say around 77 calendar days. So that's roughly around 1.5 month calendar days, or say 1.5 month of the trading days. So Ujjivan, our lot size is 1600. We have made 170 points. So roughly around 167. It's 170. I calculated it in the Excel. It's roughly say 170 points into 1600. 1600 is our lot size. So that has given me a return of 2,72,000 rupees. 2,72,000 rupees. And you know what is the margin requirement? The margin requirement is 61,000 rupees odd. So roughly 2,72,000 is your profit, and your margin requirement is around 62,000 rupees, your total return on investment is 438%. So it has multiplied 4 times. It has multiplied more than 4 times in a matter of 50 trading days. So if you, when you are getting this kind of opportunities, I think you should be doing this in case if you have a good investment portfolio. And calls, anyway, we can always give you the calls. We can always give you the calls, and then we can give you the targets. We can give you the stop loss. You can definitely make some real good money without any uh, fear of gap up or gap down opens. I think we have seen multiple number of gap ups and gap downs in this past, let's say, 2 months. We had a lot of problems. We had some fundamental problems. We had some company issues, the various things what we had. So this is one of the best way to trade, provided you have money. If you have money, you can definitely make more, you can get much more returns on your investment. So this I have, this is for Nifty 50 scripts what we have. Other than this, we do even intraday also. I think you are seeing that every day. Uh, Other than this Nifty 50, I have the scripts on non-Nifty 50 also. So you can calculate the profits, approximate profits from the entry level to the LTP, multiply it by your lot size, and you'll get the profit. And the profit, you can calculate the percentage of profit with your margin requirement. That is investment, that is what you'll be putting. That is the margin requirement. You'll get the return on investment. And so the Y value will be your number of points that you have earned. Time, that is 77 days. I mean, I am just showing you Ujjivan. So I'm just showing you Ujjivan. So the name of the script, and it is a daily candle. Every candle represents 1 day. The bars, hash bar, represents 49. 49 is nothing but the number of trading days. The number of trading days, and we have the Y value, and we have the time, that is 77 days. 77 days is nothing but your calendar days. That includes your holidays and your weekends, that is Saturday and Sunday also included. So you can calculate either way, I mean 77 days or 49 working days. It depends on how your mindset is, or how you calculate your return on investment. I calculate on my return on investment on uh, the number of trading days, because whenever it is a holiday we don't trade, so I do it that way. So 49 days, in 49 days I have made around 400% returns on Ujjivan. And the Y value will represent your number of points that you have made, that is the profit you have made. So you'll have to multiply this Y value with your lot size to get your profit. So that is how you do. So I have done it for all the scripts. I have done it for all this, and there are some scripts which I don't trade. I don't trade IFCI. I don't trade the Suzlon. I don't trade when South Bank, and there are some JP associates. These companies, you never know when there will be a problem with these companies. So PC Jewelers, I mean, we have seen top of PC Jeweler and a low of PC Jeweler also. So go into companies which are really I mean, have good corporate governance, which are standard companies, and the sector wise also. The sector wise also, when you'll have to check even the sector wise. So we had this ILFS problem. So the complete NBFC basket is all down. I mean, all are in sell. All are in sell mode. There are some scripts which have come to half of its value within this 2-3 months. Half of its value, and within this 2-3 months. And I don't see any buy call except 3 or 4 in this roughly around 200 scripts that we trade. Uh, but those have also not generated, I mean, not triggered. When they were recent buy calls, they are not triggered. We have a buy call in Adani Power, which is in profit. That is the only thing what I am seeing. 340, 34.90 was our entry. Now it is at 35.75. That is in profit. That is in green. Other than that, everything is in red. And there are some calls which have not triggered. That will trigger whenever the entry prices reaches that point. So this is what I just wanted to show. In case if you have a good portfolio, you please, I mean, you can get into this. I mean, it's tension free, one thing, and you have circuit filters. I mean, a certain script cannot go beyond a certain level. So circuit filters are there. So your money is sort of will be safe, and losses also you can contain your losses. I mean, you can restrict your losses in case if some are there, and if you feel that I mean, you can decide on your returns also. In case if I say I invest 1 lakh and in 10 days I am getting 50,000 rupees. I mean, 1 lakh 50,000 rupees, that is 50% returns in 10 days. I would be very happy. I mean, the people who uh, struggle to make around 10% returns on a monthly basis also. When you see some, and what does mutual funds give you? The maximum, I think, will be 30% returns in a year, 30% returns, or 20 or 30% returns. That's the maximum they can give, not more than that. But if you trade individually on your own account, if you have a good portfolio and I mean, investment, I think this is one of the best ways to do it. You carry over the trade, you keep a constant track of it, and once you reach your targets, exit that trade, and let's say you have invested 1 lakh in particular script X. In 10 days, you have made 50,000 rupees. So total profit, I mean, total account what you have is 1 lakh 50,000. So you can think of buying something else or selling something else. So here, since it is a derivative market, you can buy and sell, and the market itself is giving you a direction that everything is sell. You'll have to short, everything is in a short position. So this is a very good strategy for people who have money. So money makes money, it will generate money. So a person who has money will be making much more money in this way. And you know the rest of the things, since you are already into trading, or if you are new to trading also, the government takes all its its cuts first, and finally it gives you a profit. The broker takes his brokerage and then he gives you the profit. So it's a very neat business. You don't have to and you don't have to worry about anything else. Everything is in black and white. Everything is in black and white. There's nothing negative. So you pay your taxes, you pay your stamp duty, you pay your brokerages, you pay your other fees and all this stuff. At the end of the day, everyone takes their cut and then they give you the profit. You should be very happy. I mean, there's nothing. I mean, you don't have to worry about anything else. So this is all is what about the video. And what I'll do is since I have recorded this video, I'll post it. I will post the video, and I'll post the charts also. The charts also for all the scripts that are there. That is the Nifty 50 and the non-Nifty 50 scripts. So in case if you want to see what is the kind of profit that you have made on each script on, so the ending date is 27th. That is on Friday's ending close. I have made this charts, so you can see the entry point that will be that will be in yellow, and the red. So again, coming back to the Excel sheet. So whenever you get an entry, you just type entry price. So you type the entry price and then leave it. As soon as it enters, if it is a sell call, the name of the script will go into red, and if it is in profit, LTP will show you as profit. It will show in green, otherwise it will show in red. Red means that it is under loss. Then you calculate your loss, you check your stop losses, and then you trade. That is how it works. And in case if you have any more doubts, you can I will give you the mail ID and my mobile numbers. You can contact me. You can contact me and then let me know if whatever queries you have, I can answer them. So this is one of the best way, and I would say a peaceful way of trading. And intraday anyway, there is it's for people who have less investment, but that too does give very good returns. That too does give very good returns, but your investment is low. So what you'll have to do is, in case if you're doing intraday, build a portfolio. I mean, whatever money profit that you make, you just don't take the payout. Maybe for other than your expenses, you build a good size of a portfolio, and then start doing this. Start doing this on, let's say you have 20 lakhs. 20 lakhs means, let's say on an average, 1 lakh rupees is a margin required. 20 lakhs, you put 10 lakhs in the daily trades. That is, you buy or sell 10 daily scripts, daily trades. That is the positional calls. Rest 5 lakhs or 2 or 3 lakhs. I think 2 lakhs is more than enough for you to do intraday trades, depending on the margins that we provide in Nifty 50. Nifty 50, we provide the least margins. The margins are really good. So you can do Nifty 50 intraday margins. If you have 2 lakh rupees, it's more than enough. You have an other fund which you can keep aside. Whenever whenever there's some good trades, then you can utilize that amount also. So roughly around 40% will be there in your reserve, and 60% you are deploying. 60% in the sense 50% you'll be deploying in your daily trades, and other 10% your 10 or 20% you deploy on your intraday trades. You can trade really happily. So that's it. So I will just post the trades whatever I have, the Excel sheet for Nifty and non-Nifty, and even the charts. So I told you how to calculate the profits, multiply this Y value by the lot size, you'll get your profits, and you compare that with your investment, that is normal margin or the positional call, a carryover margin that is required, and you take the percentage, you'll get the percentage return on your investment, on a particular trade, or overall. If you calculate for the complete scripts what I have given, I don't know, the investment will be very huge. Let's say 200 scripts into 1 lakh. If someone, I mean, I don't know, but there are a lot of people who have money. I mean, dearth of money is not a problem. Everyone has money. Many people have money, but they don't know how to utilize it. Some people do SIP, some people do it in mutual funds and all this stuff. But here, in this particular case, you are your own master. So you know, you get the call, you place the trade, you know what is the profit that you want to book, you book the profit. And I will definitely assure you, you can make much more money than the best of the fund managers in the world, because they cannot do derivatives, they cannot short, they'll have to buy, and they usually buy in blue chips. They don't touch some small companies. I don't say small companies. Some companies they don't trade, though they are very good companies. And some people they don't trade on certain sectors. I heard a person saying, we don't trade on metals. We don't trade on metals because it's a global market. We never know what's going to happen in the global market, and then we can't keep track of it. So we don't do metals. There are a lot of things like that. I mean, some people are very specific about certain scripts only. They might be, I mean, a name usually crops up in ET now, Vakrangi. I don't know, it's lost all its value, but people have put in hundreds, thousands of crores in that. All this is wiped out. I don't even have that script. So basically, what we do is we trade only in the Nifty 50 scripts initially for the intraday, and even intraday, and we do the non-Nifty 50 F&O scripts only, the futures and option scripts, whatever is there, we trade only in that. And in that also, we are very choosy. We don't trade on IFCI and this Unitech, and you have Suzlon, you have South Bank, PC Jewelers. There are some companies which are sort of shady companies. We don't get into that. You will, once you see the Excel file, you will understand what and all scripts that we trade on. So you just have a look at it. In case if you have any doubts, you can get in touch with me. So that's it for the day. Thanks for coming. Bye.